Hi, everyone. Thanks for joining our video interview. Today with me, FinanceFeeds has CEO Ryan Moroney and Kevin Darby, who's Vice President of Execution Technologies. Both senior executives are from CQG. Gentlemen, thanks for taking the time to join us today.
Yeah, thanks for having us.
Thanks. Good to be here.
Always a pleasure. Guys, I wanted to jump right in. Ryan, I'd like to know, well, first, kudos. 2 weeks ago, CQG announced a strategic partnership with Broadridge.
Yeah.
This is to integrate the order management system and execution management system technologies. Can you tell our audience what this partnership means for CQG as a firm and all market participants more broadly?
Sure. Yeah. So the genesis of this, we've been having the conversation with Broadridge for about a year and a half now. So this actually began with a customer, a mutual customer, that started to bring us together, saying, we work with Broadridge, we work with CQG, and we think you guys might want to work together. And so we started having these conversations kind of October, about 18 months ago now. And really what the conversation started at was, we do have a number of mutual clients that are using both Broadridge's OMS solution as well as CQG's EMS solution. But the unfortunate thing with how it was working is they kind of had to go buy one solution and then buy the other solution and then find a way to stitch these two things together so that they worked well. And so the partnership discussion began with kind of a brainstorm. Is there a way for us to do a cleaner integration between our tools so that from a customer perspective, they don't have to do all that stitch work? So that's really where things began. And we began to kind of explore, what does their OMS tool do? What does our EMS do? What are the overlaps? What are the synergies? And so this partnership is really the culmination of about 18 months of work together, trying to figure out what's a good way to provide a combined OMS, EMS solution to the marketplace, where when they buy it, they feel like the whole thing is well integrated and well thought out and one solution for them, and not having to buy two different things and find a way to make them play together. So that's the idea behind it. As I said, we do have a number of mutual customers, which we think will benefit from this. But also, of course, we're planning to go out to the market together and try to sign new business collectively as well.
Mm-hmm. Great. Awesome. Guys, there's been a lot of talk about options trading lately, especially at some of the industry events that we've all attended. This is really coming, there's demand from the retail side. There's also demand on the institutional side for options trading within different asset classes themselves or within different products. Can you guys talk a little bit about sort of how you guys feel about options trading today and what kind of solutions CQG might have for market participants that are interested in launching or improving their options offerings?
Sure, I can talk about that. So today at CQG, we have sort of a full suite of futures options, execution, and analysis tools. And those exist today on some of our more popular derivatives exchanges. And those we have a good bit of customer base for those products. However, looking to the future, we're thinking of, or actually actively participating or actively pursuing getting into the equity options business. So it's a brand new asset class for us. We're talking about single name options and index options. So, and it's quite a large problem sort of technically and analytically, but we feel like we are a good team to solve it and provide value for our customers in this space. And it's kind of exciting because it's a new space for us. Interestingly, options kind of comes up whenever volatility is heightened. And that's really because, those options as efficient risk transfer mechanisms become more and more appealing to our customer base, whether it be retail or institutions alike.
Mm-hmm. Ryan, anything to add?
Yeah, no, I think Kevin hit it. I mean, as you see a lot of uncertainty in the market, I think options are kind of a natural place for people to look to transfer that risk and hedge that risk. So as he said, there's kind of the way that we're thinking about it. You have the institutional side of things, which are kind of natural option players and trying to make sure that they have the tools that they need. You did mention the retail side as well. I think just with the overall kind of rise of technology and the ease of doing complicated things, I think we can also continue to make options a more attractive thing for the retail people. It is by itself a complicated topic. And we've seen that retail investors, like sophistication and knowledge of retail investors is really, really, really high. right now, and they seem to have an appetite for complicated things and derivative products. And I think if we can find like a good way to present that to them, I think options are a great way for them to interact with the market. Yeah.
Mm-hmm. Yeah, definitely. Kevin, I wanted to throw it back to you. Can you provide our audience with an update on the suite of execution technologies that were introduced?
Sure. Happy to. So we a few years back started down this road of building out CQG's algo platform, and we've been in production for almost a year and a half now, mostly in U.S. markets, CME, Globex specifically. We have expanded that exchange footprint, so we are now trading on CME, ICUS, and CFE, and we are also bringing the MiFID and other APAC exchanges to production, actually kind of as we speak. So the core algo functionality was produced by myself and the team over the last sort of 3 years or so. We've been in production since about 18 months and have got some really good results. Very happy customers, and we hope to expand that customer base to Europe and APAC. And we actually did a little simulation where we took our CQG arrival price algorithm, which is sort of a novel implementation, and we simulated basically the money we would save customers in the year of 2022. And we found that 80% of the time, we did better than a market order for what we would call a large-ish order size. So like 50 minis, 50 oil, 200 10-year. And then 70% of the time, we got the order done within the bid offer spread, which, when you look at trying to execute those size orders in today's markets is actually pretty good results. So we're happy to sort of publish those results. We're working with customers every day, and we're interested in finding people who basically naturally want or need to accumulate these contracts, but minimize the slippage that they have to pay in the market to get them.
But one quick thing to add there, I mean, just from our side, like there's a really kind of interesting, exciting angle to this because, in the technology vendor space, all the tools that we build are generally either trying to help people make better decisions, better trading decisions, or they're on the risk side of things to make sure that they don't, do something that's going to ultimately hurt them. This is the first thing that we really built where by using it, there's a very direct correlation to the amount of money that they save. So using the algos, as Kevin said, 70% of the time on a largest order, it's filling the order better than the midpoint of the bid offer spread on a large order is actually quite significant. And so the transaction cost savings for the customer is real tangible money that goes straight to their bottom line. And so, we always believe that our tools help customers make more money or not lose money. This is the first one where there's like a very direct correlation that says, if you use this on average, here's the savings you're going to see. And there's a real tangible benefit for them. So it's kind of a fun thing to go to market with.
And it's also it would be also very interesting in the future to see if you guys would come up with like a worksheet or a white paper to sort of kind of give some insights into some of these cost savings, because I think a lot more market participants would definitely be interested to know kind of what they could save by using your technology.
Yeah, we have a little flyer that we're circulating, and the actual method itself, I wrote a white paper back in 2021 about, and published that. And it's a little mathy, but it's a good read.
That's awesome. Guys, I think we mentioned a little bit of the macro environment going on right now. One of you mentioned, in terms of why is there demand for options. I wanted to ask, interest rates and inflation are a very big theme right now. And I'm sort of looking around and thinking, is this leading to a higher demand for trading technology? So I was going to ask you guys, are you guys experiencing, an influx of new potential customers, just given the current situation and the sheer amount of market volatility and everything else going on?
Yeah. So volatility for our business is good to a point, right? And so I feel like right now we're living in this balancing act where, interest rates being up, ultimately, it does bring some of the volatility up, inflation's up. And so there's more trading opportunities. There's a lot of volume in the marketplace right now. I think you're kind of seeing over the last, 2-3 weeks, kind of all-time high record-setting volumes on many of the exchanges, especially the derivatives exchanges. I think this is, again, a representation that in high vol areas, people are kind of running to the derivative markets, which are kind of designed for risk transfer. So we're seeing all-time high volumes. I think the balancing act is making sure that like volatility is good to a certain point, and then when it bubbles over that, then you end up with like this kind of contagion spread, which is ultimately bad for everybody. And so we're keeping a close eye on it. Business right now for us is quite good. I think demand for tools like ours is up. It has been actually for some time. I would say the last 3 years we've seen pretty significant high demand, but the last 2 months especially an increase in that. So we're happy with it so long as it stays in like a reasonable range. Yeah.
Mm-hmm. Kevin, anything to add?
Well, I think an interesting thing to me about high volatility and sort of bounded high volatility is all of the mathematical relationships of the derivatives, whether it's options or futures, they all still obtain. And there are more sort of opportunities for sort of our prop trading clients that arise from this volatility, given that the mathematical relationships still must obtain, but the market volume and sort of fervor itself kind of knocks things around. So our prop trading clients are very happy with this sort of environment as well.
Mm-hmm.
Yeah.
And
one last thing to just kind of mention real quick there is, I think also just for the industry as a whole, seeing this really high volume, record-setting numbers, and everything's working. We're not hearing of issues at the exchanges. On our side, the technology, everything's functioning. So I think it's just kind of a kudos for the whole industry. I mean, we work really hard to build tools that are like well built, that anticipate high market volatility, because if you build something that works for your exact number of volume right now, and then some macro event happens and volume goes through the roof, that's the time that the industry, people need our industry the most. And if we fall down in those moments, it's ultimately bad. And so it's kind of an area of pride, I think, for the whole industry, that the exchanges, the back office systems, the brokerage workflows, the technology workflows like ours, everything seems to be working and not breaking under stress, which I also think is a really good testament for what we've all built.
Mm-hmm. Yeah, I wholeheartedly agree with you, Ryan, because that's another topic that we've sort of spoken about internally here, in that it looks like the whatever you want to call them, some of these black swans or huge volatility events, it looks like things are holding up, which is a testament to the fact that technology has improved and technology has progressed so far along the way.
Mm-hmm.
Guys, you mentioned algos, and when I think of algos, I start thinking about artificial intelligence and things like that. And so I wanted to ask, so according to a recent JP Morgan survey, AI tools are expected to be the most influential technology in the future of global trading in general. I wanted to ask, is CQG developing any AI-powered tools or products for the future?
Sure. I'll start, then maybe pass it over to Kevin. It's an interesting topic because, as you said, you get the study from JP Morgan saying they're going to be highly influential. At the same time, pretty much all the Wall Street banks coming out saying, okay, nobody can actually use many of these tools. So I'll use ChatGPT as an example. They're influential, but you can't use them. And at the same time, you've got news reports coming out that, a big fund like Citadel is negotiating a firm-wide license for ChatGPT for a number of reasons. So I would say it's a very kind of controversial topic right now in terms of what role AI has in finance. I'll let Kevin talk about it here in a second, but I will say from our perspective, we're at least approaching it from the perspective of being very cautious about data privacy, what information needs to go into the tool, and focusing a little bit more on what sort of information can come out and educate people. So, but I'll pass it to you, Kevin, if you have anything to add.
Yeah, sure. I think sort of the magic behind ChatGPT and maybe the lesser known entry from Meta, which is called Llama, in these large language models is really super cool. And it's just amazing that we can do stuff now that we couldn't do before. And for our business, I think, there's a place, sort of at a measured pace to sort of add these large language models. And we've got research projects sort of spun out to analyze how these can help CQG customers with an eye toward privacy, like Ryan said, because it's really important. And then I think if you look at what they actually had to do to make Llama work, it's sort of more opaque what the GPT team has done, but Llama actually sort of chronicled their sort of journey with, first reproducing some other results and then getting their own. And so if you look at sort of what happened, it was a team, a highly specialized, really talented team. And the entire thing was just fraught with peril. I mean, machines died and they found bugs, and it took a long amount of calendar time, not to mention 10 years of GPU time just to train the small model. And so, when you start to think about the cost of that, it's actually easier to maybe have a kid, cheaper to have a kid and teach him snarky remarks than it is to train a GPU at these points. Secondly, I would say there is another sort of, application of AI, which, as you mentioned, would be algos. So I've thought about this for actually a good bit. And I think the right way to do this is to take sort of a well-known algo like arrival price or like VWAP, and then perhaps give it some more parameters, and then see if we could have compelling results with an AI optimizing a well-known algorithm. And that, for us is a lot less scary than sort of unleashing some horrible chimera black box algo on our clients in the markets. We're definitely not doing that. But is there something where we could use AI to optimize or train well-known algos? Yeah, I think there is, and we're actively working on it.
Great, awesome. Guys, we covered a bunch of different updates from CQG, but I wonder, is there anything else that you guys can mention that's coming down the road as we progress in 2023?
Well, I would say that the main things we're focused on, we've kind of talked about, which is options and kind of the rise of options as a tool for sophisticated traders and the role that we can play in that. The execution technology stuff that Kevin oversees has been a really significant growth area for us. He's talking about some of the results, but from a business results perspective, we're seeing kind of month over month, that volume is growing 2 to 3 times every single month. So we're seeing a really significant amount of adoption moving over to these algos, which is a really encouraging sign for us. So we continue to invest in that. But then, there's so much uncertainty kind of getting back to the stability of the industry. We also are kind of cycling back right now and just checking all of our decisions and architectural decisions to make sure that we've built everything so that it's stable and reliable. We've been in business since 1979. And so you don't survive this long without thinking primarily about your customer and making sure that the service works for them. And so I also think this is a time, it's not like a great flashy thing to come out with, but it's a time to cycle back and make sure that everything that we're building is designed to scale up for these black swan events, so that if something were to happen, that we're there. So that's one. And then the last thing I'll mention, just because it's a major focus for right now, is we have been spending a lot of time the last about 2 years now on a lot of the security compliance stuff, SOC 2 certifications, all of that. So that's also a major focus of ours right now, is to make sure that kind of the security side of CQG is well thought out and well designed, and we have all that. So those are kind of things going forward that are maybe not so much like product feature based, but they're more so to make sure that if we're needed, that we're there as a company. Yeah.
Right.
Yeah.
Everything has to work.
Yeah, absolutely. I think that in of itself is an update. We're going to take a step back. We're going to make sure everything is working properly, and we're also going to focus on our customers and the security of the systems and everything else. So that's awesome, guys. Thanks for taking the time to speak with us remotely and giving us your insights. It's always a pleasure to speak with you and get sort of in-depth details on what's going on in the industry. Best of luck to you guys. Hope to see you at an industry event soon.
Sounds great. Yeah, thanks for having us.
Absolutely.
Thank you, guys.